Hi friends, my name is Bharath Chandra. Today's video is huge crash in markets, bloodbath in mid and small cap stocks. Indian markets fell heavily today and touched a 7-month low. Nifty 50 today it fell by 1.5% and percentage fall from the lifetime high 11.8%. Nifty mid cap 100 4% down today and 13.5% down from the lifetime high. Nifty small cap 100 4.1% down and from lifetime high 13.9% down. As expected, Indian markets corrected further today. Large, mid and small cap indices are all in correction mode and mid and small cap indices are not too far from the bear phase since 20% fall from a recent high is called bear market. The damage was more in specific individual stocks where many stocks fell between 5 to 10% today. India VIX, which is a volatility index, went up by 7% to around 16. There were many reasons for the fall today. Number 1, strong economic data in US. Stronger than expected US jobs data released on Friday evening brought fears in investors on whether Federal Reserve may postpone rate cuts for many months since economic growth seems to be strong. The US unemployment rate fell to 4.1% in December while job growth remained strong in the US. The global stock markets have been hoping for a rate cut since many months, but the likelihood of a rate cut has been reducing over the months because of higher than expected economic data in US. Now it is expected that the US Federal Reserve may cut rates only once this year instead of 3 to 4 times. Point number 2, significantly weakening rupee. Indian rupee continued to slide downwards. It touched a lifetime low of rupees 86.6 against the US dollar today. The good US economic data resulted in dollar strengthening. This is likely to encourage further outflow by foreign investors and import costs are likely to rise significantly in India. IT companies and companies which have significant foreign revenue will benefit from falling rupee. Point number 3, continuous and heavy FII selling. FIIs have continued to sell in Indian markets and they have been selling at a higher rate. In January so far, FIIs have sold stocks worth around 21,350 crores and in December they had sold stocks worth 16,982 crores. In total, FIIs have sold shares worth almost 2 lakh crores since October 2024. Some reasons for FII selling are A. Slowdown in the Indian economy. B. Indian market valuations are higher than other emerging stock markets. C. Dollar value rising. And D. Concerns of tariff increase by Donald Trump. Point number 4. Crude oil price jump. Crude oil prices went up to a 4-month high today as US imposed fresh sanctions on Russia. This situation is threatening to disrupt supply chains. Since India is a major importer of oil from Russia, it may impact negatively since if supply is lower, prices will increase. Point number 5, weak global cues. Today, Asian markets were all weak and European markets also traded weak. Indian markets just follow these markets. On Friday, US markets were also down around 1.5% and hence it was expected that the other markets may react negatively today. This was a very good experience to new investors in the stock markets since 12 to 14% fall in overall markets from recent high has not happened too many times in the last 4 to 5 years. As long-term investors, you must hope and pray for further correction so that you can invest more money at lower prices. Many investors may be happy that there is a correction. However, they could make a mistake of waiting for some low level such as Nifty 20,000 which may or may not come. So invest in phases and do not time the markets by waiting for the lowest point to invest. Just keep investing regularly. If you have some lump sum amount, you can make up some rule of your own where you will invest rupees 50,000 to 1 lakh for every 1 or 2% fall in Nifty index. You can invest in stocks and mutual funds as per your comfort and confidence, but do not miss investing some money if you have surplus money which is not required for next 8 to 10 years at least. Better to invest at slightly higher level than the lowest level and earn good returns in the long term than keep waiting and not invest money and maintain it in bank deposits, since inflation is beating bank deposits and eroding the value of money year by year. If you like this video, please click the like button and mention in the comment section what is the amount of lump sum you have for long-term investment. If you have some lump sum amount, mention the amount in the comment section. Otherwise, type no. Thank you for watching this video. Please subscribe to our channel. Bye bye. All the best.